Impact on the global economy. These tariffs could force American consumers to pay thousands of dollars more for vehicles, potentially leading to decreased car sales and job losses within the industry. Major car exporting countries like Canada, Mexico, Japan, South Korea, and Germany would also be affected. Retaliatory tariffs from these nations are expected, which could escalate into a global trade war and hinder global economic growth. Some analyses predict a decline in the U.S.'s own GDP and employment, even before considering foreign retaliatory measures. Impact on the Japanese automotive industry. Japanese automakers face the prospect of a 25% tariff on exports to the U.S., which would diminish their price competitiveness and potentially lead to a substantial decline in sales. Export values could decrease by up to 40%, resulting in significant economic losses for the Japanese automotive industry. Some estimates suggest that this tariff could reduce Japan's GDP by 0.33%. While many Japanese automakers have production facilities in the U.S., they still rely on imports from Japan for certain models and parts, which would be subject to the tariff. Smaller automotive manufacturers with limited U.S. production bases would be particularly hard hit. Ripple effects on the entire Japanese economy. The automotive industry is a vital pillar of the Japanese economy, accounting for a significant portion of exports and generating substantial employment. A decline in this sector due to U.S. tariffs would negatively impact related industries such as steel, machinery, and electronics. Reliance on a single industry heightens risks such as rising unemployment, regional economic deterioration, and a decline in technological superiority. Impact on other countries and countermeasures. Countries that export a significant number of automobiles to the U.S., such as Canada, Mexico, South Korea, and Germany, face similar challenges to Japan, including potential price increases and sales declines. Mexico, in particular, which relies heavily on automobile exports to the U.S., could experience severe economic repercussions. The Japanese government and automotive industry are considering a range of countermeasures. In the short term, they may shift some production to the U.S., absorb tariff costs, or develop alternative markets. In the long term, they may pursue structural reforms of the Japanese economy, focus on technological innovation, and strengthen regional cooperation. Japan is lobbying the U.S. government to exclude Japanese automobiles from the tariffs and is engaging in ongoing discussions with U.S. trade officials. While retaliatory tariffs are an option, Japan has avoided public statements on the matter. The 25% tariff will raise the price of Japanese cars, making them less competitive in the U.S. market. The increased prices could lead to a significant drop in the number of Japanese cars sold. Industries related to the automotive sector, such as steel, machinery, and electronics, would also be negatively affected. The decline of the automotive industry could lead to significant job losses. The tariffs could disrupt complex supply chains, affecting the flow of parts and components between Japan and the U.S. Even with U.S. production facilities, tariffs on imported parts will raise overall production costs for Japanese automakers. The tariffs could strain the trade relationship between the U.S. and Japan, leading to broader economic and political tensions. Japanese automakers may be forced to reconsider their investment strategies, potentially diverting resources away from other areas. Regions in Japan that heavily rely on the automotive industry could experience significant economic downturns. Tariffs could force Japanese automakers to accelerate the relocation of production facilities to the U.S. to avoid the tariffs. Japan may consider imposing retaliatory tariffs on U.S. goods, leading to a trade war. Reduced profits could limit the ability of Japanese automakers to invest in research and development, affecting technological innovation. To mitigate the impact, Japan may seek to strengthen trade partnerships with other countries in the region. The tariffs will ultimately lead to higher prices for consumers in the U.S. who purchase Japanese vehicles or vehicles with Japanese parts. The tariffs could lead to fluctuations in currency exchange rates, further affecting the competitiveness of Japanese exports. SMEs that supply parts and components to the automotive industry could face significant challenges due to reduced demand. To mitigate the impact, Japanese automakers may accelerate their shift towards EVs and other alternative technologies. Japan may seek to diversify its trade relationships, reducing its reliance on the U.S. market. The tariffs could trigger long-term structural changes in the automotive industry, affecting production, employment, and investment patterns. The tariffs could affect the prices of used Japanese cars in the U.S., potentially leading to increased demand or decreased supply. Higher prices for Japanese cars could lead to changes in consumer preferences, with some consumers opting for domestic or other foreign brands. On April 26, U.S. President Trump signed a document ordering a 25% tariff on automobiles imported into the United States, effective from April 3. He promised that this measure would bring tremendous growth to the U.S. automotive industry and promote domestic employment and investment. Last year, the U.S. imported approximately 8 million vehicles, valued at about $240 billion, which accounts for roughly half of all car sales in the country. Automotive parts are often shipped from other countries and assembled in the United States. When asked at a press conference if he might reverse the policy, Trump denied it. Prior to the tariff announcement, South Korea's Hyundai announced plans to invest $21 billion in the United States and to build a new steel mill in Louisiana.